Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Dave Erfle, and we're going to be talking about gold. Last week, closing at an all-time weekly high, continuing higher this week. Silver right now back above $31, and we're going to look ahead to some of the earnings that are going to be kicking off from the major gold miners mid next week. Dave is the founder and editor of the Junior Miner Junky. Dave, just a quick comment, I guess, on the gold price. Last week it closed at an all-time high. This week it is continuing higher. And really, it's been almost a straight up move as we turn the calendar into the second half of this year and into the third quarter of this year. Dave, what are your thoughts on this run much higher in gold?
Yeah, it started on the first week of the quarter was a holiday week. It was only 3.5 trading days in the U.S. It had a Canadian holiday, a U.S. holiday. A lot of big money players, fund managers, they were mostly on vacation. So this is happening during summer doldrums and lower volume, but it's still happening. And it's nice to see, especially for the mining stocks, which actually predicted this anyway, because they started to move higher. They started to show relative strength to the gold price. Silver started to show relative strength to the silver price. GDXJ began to outperform GDX. So it's not really surprising, it's not surprising to myself or my subscribers that I was informing that this was going on. We had a $150 correction of a $450 move. That's healthy. And the rising 18 moving week average was support on both the gold price and both GDX and GDXJ. 32 in GDX was support after being resistance, and 40 in GDXJ became support after being resistance. I don't even think they got down there. They got close, and then they started to go back up again. So this really isn't surprising to us, but the general investor still really isn't even following, because what else is making all-time highs, right? The stock market is making all-time highs right along with the gold price and right along with the miners making 52-week highs as well.
Yeah, Dave, it's kind of a melt up in almost all markets here. And I think a lot of that ties into some of the Fed expectations about the rate cuts that are probably coming in September. But it is interesting dynamic where most investors, no matter what sector they're in, are probably doing okay in this kind of a price rise. But if we just focus in on the gold stocks and look at GDX, it is at a 52-week high, to your point, and it does seem like there's getting more traction. Do you think, like we talked about last time, that this is just the beginning of a bigger move once we see Q2 numbers come in, which should start very soon, because gold and silver, for that matter, have been at a lot better place as far as what the producers are selling them for than we've seen in prior quarters?
All right. The earnings season kicks off next Wednesday with the big boy. Newmont reports next Wednesday. And after Newmont reported very strong Q1 results, the stock was up 12.5% the day that it announced, and it was by far the biggest gainer on the S&P 500. And by the way, Newmont is the only gold stock on the S&P 500. So they're about to report next Wednesday, and the gold price is almost $350 higher than it was in Q1, while the oil price has really not moved that much. It's gone up, it's gone down, but the average is, I think, around $75, $78 a barrel, something like that. And that's 50-60% of Newmont's cost, because most of their mines are these big open pit mines that require a lot of diesel. So I wouldn't be surprised to see another blowout quarter. And if that takes place and the stock reacts very positively like it did last time, these generalist fund managers can no longer avoid this sector anymore like they've been doing. 2 consecutive strong quarters of the largest gold miner having these outstanding profits, that can no longer be ignored. So I would expect to start to see some generalist investors finally come into this sector, because if you look at the volume on these breakouts of both the GDX and GDXJ to 52 weeks high, it's really not that impressive yet.
So, Dave, bringing in these generalist investors, I think these majors have a couple options besides just reporting good numbers. But if they do report good numbers, they build up these cash positions. Do they need to pay higher dividends to bring in these investors, these generalists, or do they need to go out and start aggressively acquiring?
I think that both moves would be a good strategy. And also, share buybacks. Newmont, and by the way, I'm a Newmont shareholder. Newmont announced a share buyback program, and they had to lower their dividend to when they acquired Newcrest. But yes, I mean, they need to concentrate on giving more money back to shareholders and replacing these ounces now, because now that they've shored up their balance sheets. The balance sheets of mining companies have never been more healthy. And now that they're going to be announcing these fat profits here starting next week. They're going to have to start concentrating on replacing those ounces, and that means more M&A. So I think we're going to probably start to see more M&A toward the end of the year.
Well, Dave, let's dive into M&A a little bit further and what kind of companies they may be targeting. We were having a nice discussion before we started recording today just about what are the types of companies they'll be going after. Will it be producing assets? Will it be development stage assets? What are the criteria that you think the majors or the mid-tiers will be looking at?
Well, I think it's going to be, producing assets with, with a long life mines with blue sky potential, especially if it's companies that are maybe in the finance stage that are yet to construct or are constructing a mine. We've already seen M&A of companies like that with Argonaut recently, almost taken over Argonaut. So, because we've also seen this finance window open up wide again recently with these really large strategic financings and financings from large funds. So they're showing the market that they've got the access to capital. Some of these projects now are fully funded, or they've already got the equity component, and now they have to add the debt component, but they've shown that they've got the access to capital. And what they're doing is they're at the finance stage and they're funding these mines that some of them have really high margins and they have huge blue sky potential because there's still plenty of exploration left on the property. Some of these stocks that I hold that I've fortunately had this happen to, where we've had these financings come in and fund the project either partially or wholly, there's still plenty of exploration upside on the property, and they're already high margin projects. That's exactly what these majors are going to be looking for.
Do these majors also move into copper? We've seen a lot of the gold companies talk about they want to diversify into copper. Does this higher gold price maybe distract or put that transition, that strategy on pause?
No, I think, especially if you've got a gold project with a large copper component, that's going to be very attractive. So yes, I think because, we've seen all the analysts come out with all these numbers saying, hey, we need large copper mines and they're just not on the horizon. So I would expect that a lot of these copper juniors are going to start to get some love pretty soon because this green movement is going to need a lot of copper.
Well, Dave, let's also talk about silver because silver currently is around 31.50. It's back above the $31 mark. But the silver companies should also, and I guess we have to say that in air quotes because some of them are also zinc, lead, and copper companies in their own right. But in general, the silver companies, even the worst silver producers, should be making money in Q2 as well, along with the gold companies. How are you looking at the crop of silver stocks at this point in time?
Yeah, I mean, I'm highly leveraged to silver, both in my retirement account and in my junior account for myself and my subscribers. I've been pounding the table on the opportunity in silver for especially recently because the price finally got above 30 and now we're seeing successive closes above 31. Once we get above 33 in the silver price, there's some resistance at 35, but the next major resistance is around 39.40, and it could get there very quickly because these moves in the silver price, they happen quickly in both directions. So yes, I'm highly leveraged to the silver price. In my retirement account, I have leverage in royalty companies with large silver exposure and also mining companies with large silver exposure. And in the junior side, I'm also highly leveraged with the highest leverage junior silver companies.
So does this better market environment filter down to the juniors, even when you consider, again, silver's doing better. That's a smaller market than gold. And even something like the Russell 2000, the small cap stocks, they have been screaming higher as well. Does this finally show you a green light for broadly the junior sector?
Yeah, and you're already starting to see it, right? You're starting to see several of them bifurcate higher, and some of them are seeing stronger moves than the majors even. So that is starting to filter down already. Not all of them started to move, but you're starting to see breakouts from huge bases in some of them, and some of them falling wedges. You see the downtrend line being broken with these large white candles. So it's already starting to happen, but there's still a lot of room to go on the upside for these stocks. And we do need to see the generalist investor get back into this sector. And I think once you see the gold price breaking out above 2,500, we get more attention to the gold price, and we'd see the silver price getting above 32, 33, getting towards 35, bringing more attention to this to the silver market and the silver sector. This sector is super tiny. We've talked about this before, and it doesn't take much interest to really move these stocks.
Well, Dave, just from a big picture, if you think about how well the general markets have been doing in the big mega cap tech stocks, and now to Corey's point that the small caps are finally catching a bid, do you think we're going to have the same kind of cycle in the junior miners that we've had in the past? I mean, I know that they will run if the metals prices do well, and they are starting to wake up, but is it possible that investors are just so distracted with all these other markets doing well that we're not going to have the same kind of influx of capital, even though it's a small sector, maybe it won't see as much as it has in the past?
Yeah, I don't think we'll see that until the stock market and we start to see some rotation from the AI stocks and the meme stocks come in back into this sector because they left 12, 13 years ago and they've yet to return. But I also think it'll be selective. I mean, the last few times we've had this pendulum swing move from extremely bearish to newly bullish, then we had these huge moves in just about everything. We had the financing window open and everything got financed. That's not happening. I don't think it'll happen once we see the generalists come back. I think they'll be more selective, and the banks are being more selective. Financings are being more selective on, investors are being more selective on the companies that they're coming into. So, and that's good because we still need to see a lot of these companies go away. So I don't think it's going to be the rising tide lifts all boats this time. I could be wrong, but I just think it's going to be more selective for a little longer.
What are you doing within your portfolio? You've told us a number of times that you're happy with the positions that you have, but when you see some stocks outperforming, because it isn't just all of them going up at the same degree every single day, do you rebalance? Do you shuffle? Do you find other opportunities since it is broadly still a better environment than it was just a couple months ago?
Absolutely. I have risk management rules. There's a stock that I'm watching very closely now. It's close to becoming a triple for myself and my subscribers. And once it gets to a certain price, I plan to sell 1/3 of it. That'll take out my investment capital, and I'll hold the rest for an expected buyout or when I believe the mining cycle is peaked. And with that money, I'll rotate it into other companies or I'll add another position. What I'll probably do is I'm still accumulating 3 positions. I'll probably use that money to add more to the 3 positions I'm accumulating. But absolutely, I mean, I have rules, and once a position gets too large, you have to trim it, take some profit, and it's always easier to hold a stock when it's risk free, meaning you've taken your investment capital out of the position.
Yeah, so true. And you know what? Hey, people should have gains right now. Things have moved up. A lot of these stocks have moved up. So sometimes you can find some better opportunities out there. But at the same time, look, this rally is continuing. And yes, fine. A lot of other markets are rallying, but it's nice to see that the gold sector, the stocks are joining in that rally and giving us some of the gains that we've all been waiting for. Dave, thank you as always for your time. I'll post a link to the Junior Miner Junky website in the show notes. That's where everyone can follow along with your portfolio and the stocks you are buying. Thanks for your time, Dave.
Thanks, guys. Have a good